Yo, my people, we are live. Just going through the news quick here first. Live and set, so I'm going through checking what went down yesterday. Yesterday we had the CPI readings, and so the inflation report basically came out, and what it said was, let's go into that. 14th of February, Valentine's Day. So what it did was, the CPI reading, the inflation report, the Fed's report on inflation came out higher than expected. So last time we had a CPI reading, it was 6.5%. Now it was expected to go lower this time. The inflation was expected to decrease, and it was expected to decrease from 6.5 to 6.2%. What really happened was that it decreased to 6.4%, so 0.2% higher than expected. What does that mean? So it still went lower than 6.5% that was last time, but it didn't go as low as expected. Now, market expectations are very important when, let's put it like this. Market expectations is very important in trading. Why is that? Because market expectations, if they're not see true, if the market doesn't do what is expected from the people, then or let's put it like this: if different factors, geopolitical factors, doesn't do what the market expects, then what happens is the market reacts it, of course. And if the market has expected the inflation to go down to 6.2% and it doesn't go down to 6.2%, it only goes down to 6.4%, what happens is it creates a little bit of a turmoil in the market. It creates uncertainty in the market, because this shows that the Fed actually doesn't have such of a control of the inflation rate as was expected. And how have they been controlling the inflation rate? They have been controlling it through rate hikes. And everybody wants and expects lower rate hikes, right? Everybody expects the Fed to be more dovish in their approach to dealing with the inflation, because they've been very hawkish, very aggressive with it, increasing rates very aggressively. So now when inflation shows that it's not going down, it's not under control as much as expected, then what happens is people see that, okay, the Federal Reserve doesn't have control over the inflation as much as we thought, and we might see inflation actually start going up again, And what does that mean to, for example, the US dollar? So when inflation goes up or it's not under control, the Federal Reserve's weapon or tool to deal with that is to increase rate hikes. So they increase the interest rates, the Federal Reserve interest rate. And what that leads to is that more people are, now it's more attractive to keep your money in the US dollar. So if banks around the world and institutions keep their money in dollar, what does that do to the US dollar? The US dollar goes up in value. And when the US dollar goes up in value, all correlated currencies and gold, crypto, for example, goes down. So that's not good for that. S&P 500 goes down. affects a lot of different parts of the market. So that is that, and this is what we saw a lot of turmoil in the market yesterday. So let's look at quickly what happened in the market yesterday, so you can see directly. Okay, this is what I'm talking about. So this is, now we're looking at Bitcoin, and this is yesterday when the news broke out. So you saw market dropping first, almost like a fake out, and then it did a quick pump. Let's go to gold. No, let's check the US dollar first. Yeah, so you see the US dollar went down in expectation of the market, and when the news dropped, it popped because the news was good for the dollar. And if you look at, let's see if Euro USD can load up for me. Yeah. So let's do like this. So when the news popped, it was the opposite for the Euro USD. All right. I hope you guys see the stream good, because it seems like YouTube, the connection with YouTube is lagging a little bit. So hopefully this is not choppy for you. Anyway, so dollar went up, Euro USD down, of course, because it's paired against the US dollar. Now what happened with gold? Look at this. Boom, major drop. It dropped down because dollar went up. And like I always say, whatever the dollar does, the gold does the opposite most often, like 98% of the time. So with that said, what can we expect? Well, we can actually expect pairs like, for example, gold to drop actually even further. Why is that? It's because we have a lot of negativity in the market. Like the outlook for the US economy is not good. So people are now expecting worse time to come, and that those expectations will directly reflect in the market. So that's that with that. But as we know today, I just wanted to go through this briefly so you understand what happened yesterday with the news and what's been going on. Now, why are we here today? We are here because of the Bootcamp, the live Forex and crypto trading Bootcamp. It's day 3, and today we are talking about trading mindset, trading psychology. This is a very, very important topic. I can tell you this. So in my trading journey, when I started day trading, I learned, different strategies. Even got good at risk management, this and that, and I became really nerdy into trading. But I didn't start to see profits. I didn't start to see wins until I mastered my mindset, my trading psychology. It's super important. So trading psychology is 80% of your trading. 80% of trading is your just mindset, while 20% is your strategies that you use. So that says a lot about it. That says how important it is. So you can know all the strategies in the world. You can know the best strategies. You can have the best guru teaching you. But if you don't learn mindset, trading psychology, you won't be a profitable trader. Now we will dive into that, why that is. So what are the most important aspects of having a good trading mindset, a good trading having good trading psychology? Now, let me go to a little bit cleaner chart, so I can use it as a notepad for you. All right, so what does that mean? This is what we do. So, number one, proper trading psychology. What is that? You gotta have a trading plan. You gotta have a trading strategy. And that trading strategy, you know, it doesn't matter so much what kind of trading strategy that is. It doesn't matter if it's from me, from the world's best trader, or anybody. The most important thing with that trading strategy is that it's back tested. So, and you should not only, like, let's say you see a trading strategy that I use and you duplicate it. Now, you cannot just duplicate somebody's trading strategy blindly and just go for it. You have to backtest the trading strategy. You have to see that it really works, especially with your trading style, because a lot of people have different trading styles, and not everything is suited for anybody. Understand what I mean? So my trading style, for example, like when I'm here on the live morning streams, I look a lot for the volume because I look for those little bit longer day trades, almost swing trades. But when I trade myself or with my team live in person, I scalp. So I trade very fast, very frequent, in a very short amount of time, very frequent. Why do I do that? It's because that style fits me better. I go in 15, 20 minutes, half an hour, I take my profits and I'm out. Now, of course, you're wondering why don't I do that on the live streams? Because I can't. Because when I do it on the live streams, what happens is when I'm streaming live, it's a delay about what I'm saying now. It comes to your ears about 6, 7, 8 seconds later. Understand? So that delay is detrimental in scalping. 6, 7 seconds, a lot of stuff can happen. So if we find a faster way to stream, yeah, of course, I will stream when I scalp. That will be the most fun actually, because that's what I do the best. But when I send out signals in the signals channel, and when share trades, which you guys see on the live stream, I have to use day trades and swing trades because that's the only thing that works. All right. So number one, you gotta have a trading strategy. You got to have a trading strategy. Obvious, right? A good trading strategy. Now here's the thing that's so important mindset wise with your trading strategy, because a trading strategy has something to do with your mindset, has something to do with your trading psychology, but something that definitely has to do with it, what is that? Is sticking to that trading strategy, sticking to a trading plan. And that is when discipline comes in, major a lot of discipline. That is when patience comes in, and emotional control. Now, emotional control, like, listen, I use trading to build up my emotional control. What do I mean with that? I mean, like, to improve my emotional control to not only trading but to everything in my daily life. And that's what's so nice about trading. You learn to be disciplined, patient, and have emotional control. And that is key aspects that you can use, especially if you're an entrepreneur. You will have major use of it in your entrepreneurial life, but also in your relationships, in your daily life. You will become a much more successful person, not only a much more successful trader. All right. So you gotta have a strategy, and then you gotta have discipline to stick to the strategy. All right. Um, and let's talk about it practically. So, why is emotional control so important? Okay, so let's go into the charts and look at it. So let's say you're in a trade. You're looking to make a trade. You set your stop loss here. is to take profit, and your strategy, according to your strategy, you are supposed to. Now I'm just taking an example of a strategy because, as I said, there's a lot of different strategies, and everybody should use a strategy that they feel fits for them. And that's why important also, like for you people that are new listening and watching this, go through different people. Like, don't stick only with me or and 2, 3 other guys and or whoever you're listening to, because you have to find somebody that uses a strategy that you feel that, okay, this, I understand this. Like, not only understand, like, okay, when the market breaks out from this support or resistance and retest it, then I'm jumping in. You have to understand why it's doing it, so you understand the logic behind the scenes, behind what it's doing. So let's say your trading strategy says that when market breaks these highs, you move your stop loss to break even. That's when you move your stop loss to break even. All right. Let's say that is your strategy. Now you trade, and look, because this is something typical that basically all traders has experienced. Market comes, moves up here, and then does something like this. So stops you out on your stop loss to start moving up again. All right. This has happened 2, 3 times for you now, but you haven't changed your strategies. You're still keeping the same strategy. So, but because has happened 2, 3, 4, 5 times now, you start to get emotional about this. So what happens is market starts to move up. You're in the trade now, and you know when market breaches this level, you move your stop loss to break even. Market starts to move up, but before it goes there, it starts to go down again. You panic. You don't even have to panic. You get emotional. You start to think, hey, look, every time it has done that, it has broken my stop loss, has triggered my stop loss, and then gone up again. So what am I gonna do? I'm going to move my stop loss to give it a little bit more space. Now the problem with this is you haven't sat down with your journal book, with your trading journal book or whatever, and written this whole situation down and revised your strategy and made a new strategy. So you're still keeping the same strategy, but you're modifying it now as you go because you're getting emotional. What does that lead to? Okay, so market starts to go down. It starts to chop around. It looks like you want to go up, then it goes a little bit more down. What do? Well, you move the stop loss a little bit more. Market moves a little bit more down, you move the stop loss a little bit more, and then finally it stops you out. And instead of losing this much, which was, if you were watching my session yesterday about risk management, so let's say this was your proper risk management for a loss. Instead of losing this much, you now lost this much. So you pretty much doubled your risk into this trade and you doubled your losses. You don't want that to happen, right? So this is why when this kind of stuff happens, you have a trading strategy and something is happening in the market right now and you don't feel good about it, it's turning around, you have to detach your emotions and just be disciplined. Have emotional control and just be disciplined and trust in your strategy. Now let's say this happens again, it stops you out. Take your journal book. Your journal book is not only you entering where did you enter the market, where did you exit the market, how much did you profit on the market, what pairs did you trade in, this and that. It's also your emotions, very important. Your trading journal book, by the way, first and foremost, you gotta have a trading journal book, very important. If you want to be a successful trader, successful day trader, you gotta have a trading journal book, very, very important. That's also a key factor that switch my trading to be from being a losing trader to a profitable trader. Now, in your journal book, you use it as a diary. Use it as a diary. So you write down your emotions in that trade. What were you feeling? What were you doing just before that trade? Were you doing something that was stressing you out? How has your day been leading up to that trade? You know, because all those things play major factors. Maybe you will start to realize that shit. Every time I come home from work and I trade, I lose because I'm tired, I'm stressed, or I'm emotionally unbalanced or something. And maybe you realize like, oh shit, every morning when I wake up fresh with my coffee, I trade good because I'm fresh in my head. I have no other things that has affected me emotionally, so I'm very stable emotional. I just come out of my morning routine. Like I'm talking about me myself now. I'm coming out of my morning routine, meditation, journaling, reading book. I feel solid. I trade because that's when I know I'm solid emotionally. So you got to be clear of all of that and understand it. And the best way to understand it is by journaling. You're journaling your whole travel trading experience. I wanted to say travel, but it's basically what it is. So it's you traveling through the experience of trading. And coming back to the point. So what happens is market doesn't do what you want it to do. You get very emotional about it. Once again, it stopped you out and then went in the right direction. And this time it stopped you out a lot more because you were moving your stop loss more than you should. What do? Stop trading, first and foremost. Stop trading because you have become emotional. So when you become emotional, you need to stop trading. That's when the discipline kicks in because that is so difficult. I know myself. I can only speak from my own experience and from the experience from people in my team that I mentor. And I know how difficult this is. So especially when you become emotional, because we are human beings, so we tend to be not controlled by emotions, but we tend to react to our emotions. Some people are controlled by the emotions as well. They really need to do some self-development, mindset training, and to get a handle of that. A very good book I can recommend about emotional control is called Emotional Intelligence. EQ, Emotional Intelligence. Very good book. There's a lot more. I can if you're on the Trade Signals channel on my Telegram channel, then I will send out some books there, some book recommendations that you can read on psychology that is very good for your trading mindset. Okay, so you're not trading anymore because you're emotional. You stop trading. What do? You bring out your journal and you start writing down. How do you feel? What happened? Why do you feel like you feel? Do you feel terrible? Do you feel good? Do you feel stressed? Do you feel upset? You're angry because it feels like the market is rigged against you and everything you do is wrong. Your stop loss gets always get hit by a couple of pips, and then the market runs in the good direction, in the right direction. So you need to write all of those stuff down, get an understanding for what's going on in your trading. And when you do that, something magical happens. When you sit down with your journal and you write all those stuff down, you be super honest with what you feel and what has happened. Have you been disciplined with your strategy? Have you stuck to your strategy or not? When you do that, you start to see the you get clearance. You get clarity. You start to see things a lot more clearer. And that is super important in trading, in everything in life. So that's what journaling in general is super important in your life. And I can 1000% recommend it for you if you're not doing it yet. Journal every morning, journal every night before you go to sleep, to summarize the day, not only about trading but in everything in your life, and you will see improvements all the time because that gives you clarity over what you've done good and what you've done bad and what you want to improve in your life, right? And it gives you clarity on your goals. And even when you're trading, you should have goals as well. All right, so you're journaling now, you see what the problem is, you get clarity over your problem, what's been going wrong, and now what happens is you start to look like, okay, maybe my strategy isn't working for me. Maybe I need another strategy. Maybe I need to improve the strategy. So that's what you need to work on. And when you work on your strategy, you don't trade. You can trade, but trade demo. The thing you should do is backtesting. Backtest your strategy to see if it's solid, if it works with you, and start using it with a demo account just to get a feeling of it and see if it's something that is good for your trading style. All right, some are more aggressive, some are more patient, and some people like to sit and hold a trade for a couple of days or a couple of weeks, while some just want to hold it for a couple of minutes. I prefer to hold a trade for a couple of minutes than a couple of hours. That's me, because I'm a very busy person. I do a lot of stuff every day. So when I trade, and then I want to have it finished. It's done. Then I do put trades that last for a couple of days, sometimes, or a couple of hours. But I don't look for these trades very frequently if it's not for to share it with the Telegram signals channel or with you guys live here on the stream. So have a trading strategy. Stick to your strategy by discipline. If strategy doesn't work, don't get emotional. When you feel emotions start to pull up, bubble up, stop trading and start journaling. Go into your journal book, dive deep into it, and write everything you feel, everything that has happened, to get a grip and understanding of what is going on and how can you change this situation. Very important. Another situation that a lot of us experience. I can tell you this. This happened to me in the Trading Signals channel. What was it? 2 weeks ago. 2 weeks ago, I was posting trades in the Trading Signals channel. And what happened was, I was posting the trade. Let's say the trade, this is the trade. I put the stop loss, I put the take profit. And for y'all that was with me on those trades, y'all know what happened. Market came down. Boom, stopped us out with a couple of pips. Sometimes it was just 2-3 pips underneath our stop loss, and then went in exactly in our direction, exactly as we wanted. This happens often. This happens, and this is when you cannot lose it. This is when you cannot get emotional about it and just understand that this is a part of the trading game. This will happen sometimes. Sometimes it will happen 3, 4, 5 times in a row, and you will think like, shit, what's going on, man? Like, is this whole thing rigged against me? Secret. It is rigged against you. The whole market is rigged against you. This is what we're doing. We're trading against the big fishes, we're trading against institutions. They are the ones running the markets. So you will always be the underdog against them, because you ain't got billions to push into the market to make the market actually move. That's what they got. So that is what it is. So when we trading, what we do is we pick up the crumbs from these big whales swimming through this pond. All right, we just pick up the crumbs and we eat out of that and we accumulate. What we got to do is when we got to trade not as the majority of the market of the retail traders. We are the retail traders. We have the institutions, we have the institutional traders, we have the retail traders. We got to do what 80% of the retail traders don't do. Why is that? Because what does the institutional traders do? They look for what the majority of the retail traders do, and they do the opposite. So that's what we want to do as well. We want to do the opposite. So let's say, for example, retail traders, you see this trade here. Where will you put your stop loss? Your stop loss will probably just beneath these wicks. Now, institutional traders, they see that, they know that, so they be pushing the market. They want to go in for buy on this market, but they need more liquidity because they're going in with hundreds of millions or billions. They need liquidity. They need to find somewhere to fill this order. So they push the market down intentionally to stop all these people out here. They got the stop losses. So that all these stop losses convert to buy orders. They buy these orders and push the market up. So sometimes when you see this thing happen, that you have your stop loss here and market just goes just beneath your stop loss and then moves in the right direction, and you think like, shit, it feels like the market is rigged against me, it's because it is. So what you do with that is back to the journal book. Write down what happened, keep track of it, be clear with what's going on in your trading so that you can review it, analyze it, and improve your strategy, make a better strategy. And that's how you get better and better and better as a trader all the time. That's why trading takes a lot of experience. I can learn all the strategies in a month or 2 months, but it will take you maybe a year or 2 years or 10 years or 20 years before you become a profitable trader. Because as I said, when I started the stream, 80% of trading is just mindset, trading psychology. Just you being disciplined, sticking to your strategy, having emotional control, and whenever shit hits the fan and you feel like your trading is completely off, you hit the journal book, you write everything down, revise your strategy, see if you can tweak it, modify it, make it better, and then you stick to that strategy. Because if you hop around, this is also very important. If you hop around and you use different strategies and different trades all the time, what happens is you will never know what was wrong. You will never know what you did wrong, what was wrong with that strategy, because you basically don't know what strategy you were using. You were hopping around from a breakout strategy to a volume-based strategy to this to that. All right. So have one strategy, stick to it, at least 10 trades, at least 10, I would say 20, 30 trades, and then tweak it, analyze it, tweak it. Again, 10, 20, 30 trades, tweak it, analyze it, tweak it. Again, 10, 20, 30 trades. And this is how you will get, how you will take your strategy to perfection. All right? So don't be lazy about it. Trading is a fine craft. And if you do it properly and if you respect the trading craft for what it is, and don't think that this is a getting rich scheme, because trust me on this. Everybody that thinks that they're going to be rich tomorrow by trading, they're the ones that are losing. So I'm telling you this now. If you think that, you will lose. I promise you that. I guarantee that. Maybe you win today. Maybe you win tomorrow. Maybe you win this whole week. But in the long term, you will lose. So if you're not a gambler that just want to go in and make a quick buck and you're done with trading, you will never look at trading again. Then if you're in it for the long term, you want to make consistent profits and make money, you gotta stick with your strategy. You gotta do what you gotta do. You gotta analyze it. You gotta tweak it. You gotta look at it for on a long-term perspective. Very important. With that said, we haven't looked into the markets so much, and we won't do it either, because I'm focusing on this bootcamp. I want to teach you as much as possible on this bootcamp, and I found that trading mindset is super important, and I really wanted to dive into it and make you understand the importance of it. So with that said, we're gonna finish the stream now, and I wish you guys a blessed day, a prosperous day, and I'll see you soon again. Boom. Oh, by the way, tomorrow it's support, resistance, and trend lines. Very important. So stick with me, and I'll see you on the stream tomorrow.